Hi guys, I'm the co-founder of FEMCA Financial Services. I am here today to talk to you about what we're trying to build at FEMCA Financial Services. Now, let me start off by giving you a clear elevator pitch, right? FEMCA Financial Services is basically an e-commerce marketplace for investment research reports. Our value proposition is that we rank investment advisors by a win to loss ratio. Now, this win ratio benefits you as a consumer because you know whose advice to take and whose advice not to take, right? As a seller, this benefits you because it helps you understand your consumer behavior. It helps you gain more pricing power. So, say you're a seller of investment research reports, right? Let's say you are Silver Sachs or Debt Suisse or some similar investment research house, right? You're one of the big investment research house, or you may be a small investment research house, right? Let me just explain the benefit for you to be part of FEMCA Financial Services. Now, let's assume you're one of these companies. So, what is the benefit of you or coming onto our platform and allowing us to give a win to loss ratio on your investment advice, right? Because right now you don't need to give a win to loss ratio. None of the investment advisors in anywhere in the world are giving a win to loss ratio on their investment advice. So why should you even consider our proposal to sell investment advice on our platform, and then on top of that, allow us to give you a ratio of win to loss ratio on your expired investment research, right? So here's the reason. Um, as an investment advisor, if you're genuinely a good investment advisor, an investment advisor who's correct more than incorrect, you will immensely benefit from selling on FEMCA Financial Services. The benefit that you gain from selling on FEMCA Financial Services is clear and very simple. The more you're correct, and the more often you're correct, and the more regularly you are correct, the better you'll do. So let me give you an example. Let's say there is an analyst A and an analyst B. Let's assume the analyst A gives investment research reports on an underlying which is Amazon shares and Euro USD. Let's assume analyst B does the same and gives investment advice on Amazon shares and Euro USD, right? So let's assume analyst A has a win to loss ratio for 85% for Euro USD and 99% for Amazon, whereas our analyst B has a win to loss ratio of 99% for Euro USD and 80% for Amazon shares. So logic would dictate that we take investment advice from analyst A for Amazon shares, and we take investment advice from analyst B for Euro USD, right? This is because analyst A has a 99% win to loss ratio for Amazon, and analyst B has a win to loss ratio of 99% for Euro USD. So, in effect, both of them are subject matter experts. Analyst A is a subject matter expert in Amazon, whereas analyst B is a subject matter expert in Euro USD. So that is the reason that you should take analyst A's advice for Amazon and analyst B's advice for Euro USD. Now that we know this is exactly what we're trying to build. Currently, no investment advisor is willingly agreeable to openly admit their incorrect investment advice, right? So this is what we're trying to solve. We're trying to make sure that we allow anyone and everyone to audit an analyst win to loss ratio. The way this works is it benefits the consumer because you have an open source way. There's no way to manipulate this. currently most investment advisors, they boast about their wins. Oh, we've been correct so many times. Oh, we've been correct so many. We were correct here. We were correct there. Look at our past track record, right? But who currently is saying, "Oh, that advice we were incorrect. Unfortunately, that investment advice we gave was not correct." No one is doing that, right? No one in the world is doing. None of the investment advisors currently are doing this, which is a strong case why they should. Here is why they should. A, it builds trust. It builds trust because you are willing to admit your mistakes. And when someone is willing to admit their mistakes as an investment advisor, or for the matter of fact, as anybody, as a student, as a business person, as an analyst, as anybody, if you're willing to admit your mistake, you will benefit from a higher trust factor as compared to someone who's always who never admits their mistake. You look at one of the current presidents of, I'm not sure, one of the largest, or the one of the oldest, I must say, democracies who never admits they're wrong, right? And all I'm saying here is that we must admit our mistakes. If I'm wrong, I must raise up my hand and say, I'm sorry, I was wrong. And if you have the commitment, and if you have that capability to stand up, raise your hand and say, oops, sorry, I messed up, I'm wrong, forgive me. I believe as a seller of investment advice, as a investment advisor, you will benefit from a better a better uh, customer retention. Not only will you build trust, in effect, you will build more clients. Because of this, you as a seller will benefit, customer will benefit because the customer can trust you that you are willing to stand up to the scrutiny where let's say you as an investment advisor are willing to say, okay boss, I have nothing to hide. You can audit me, the government can audit me, any member of public can audit me. I have nothing to hide as an investment advisor, right? This is why FEMCA Financial Services is trying to solve this burning issue. We're trying to make sure that we open source investment advisory as a startup of Y Combinator, right? We're Y Combinator startup school startup, right? What we're trying to understand and what we're trying to do currently is we're trying to make sure we help traders be correct more often. That is what we're trying to do. We're trying to make sure that traders who trade on the market, investors who invest for long term, both of them can be correct more often. So let's say I'm a trader. The way this in trading advice works is you have one of your big experts, financial experts, who say, "Oh, just buy a mutual fund for the long term. Just pour your money and sit tight. Buy right, sit tight." Who has not heard this, right? That you go, you pour your money into a stock or an underlying, and then you just sit and you wait for, I don't know, inflation to take over, so you get a couple of percentage return, but then your inflation's going up as well at the same time, right? But what I'm here to say is we want actionable intel as traders and as investors. My job is to make money. I'm here to make money. And why Combinator says this, right? That make something people want, which is true. We should make something people want. What do people want? Traders and investors, what do they want? They want to make money. They don't want to make friends. They don't want to do anything else. They want to make money. We're trying to help them make money by being correct more often. How do we do that? We do that simply by ranking investment advisors by a win to loss ratio. So before you buy any investment advice, you know who's correct and who's not, and whose advice you should take and whose advice you should not take. by looking at their historical correctness versus incorrectness track record by win to loss ratio. So for today, that is me, and